Yeah, so I got a lot of questions asked me uh, like how sometimes a publication in finance, publishing accounting, how do I navigate my research? So I just want to do a simple sharing here, and you can see the process. So a lot of my research, I focus on a lot of accounting data. So you can see I presented either I focus on the firm's annual report, findings, conference calls, social media. So you can see that a lot of foundation of my research focus on this alternative data, textual data, image data. So these are the examples of data I used for my research. So I guess the core of my research is it's a lot of accounting data we used for my research. So that's definitely accounting. But what AI help is AI as a tool to help to analyze the disclosure, to generate a lot of new variables, to help us to answer new questions. So that's the deep learning and the AI can help us to enhance the disclosure research. And why sometimes it's accounting, why sometimes it's finance? I can tell you guys, this is one I was just talking about. So for the disclosure research, you can see that there's some studies showing the incentive to disclose, why they disclose, why they do not disclose, and also a consequence of disclosure. Like say you can see like a market reaction, blah blah blah. So you can see that some of the traditional research saying they disclose good news versus bad news. That's an incentive, and once they disclose, what's the consequence and the market reaction, blah blah blah. That's consequence. So I feel like accounting is more focused on the determinant side of disclosure, and also focus on the consequence side. So accounting focus on the both incentive and the consequence. But finance is more interesting on the consequence. Like once we have a disclosure, how it affects the firm value, blah blah blah. So these are the different tastes between the two groups, and um, and I want to talk about what kind of consequence we're talking about, what kind of determinants we're talking about. Like, how does AI change the disclosure research? Because the disclosure research is AI can help a lot of disclosure analyze like different variables, textual variables. So it changed the consequence, it changed the determinants. So I want to talk about how AI kick in and how but now it's kind of my view is like finance focus on consequence, accounting focus on both incentive and consequence. So I just want to like a very brief literature review of the incentive of disclosure. So you see we have a lot of studies showing the incentive of disclosure. So for example, proprietary cost, right? The manager want to reduce proprietary cost. They want to prevent competitors learning from their disclosure. So proprietary cost is the incentive. The litigation risk is the incentive. Sometimes CEO traits, like a introverted CEO, outgoing CEO, cultural background CEO, these are also determinants of disclosure. And also companies want to lower the cost of capital. They want to like before the SEO, IPO, they want to lower the cost of capital, they disclose. So, and sometimes CEO want to maximize their compensation. These are the traditional determinants of disclosure we have studied in accounting literature. This is just an example. There are many, many other determinants of disclosure we studied. So how does AI will change the change of this kind of incentive? So you guys see the one paper I have done is the manager trying to disclose to cater to machine. So that's a new incentive because before 20 years ago, human is reading the disclosure. So the manager is doing here is to make a human happy. But right now, the disclosure is read by AI, read by machine. So the manager is trying to make a machine happy. So that's a new incentive kind of arise in the age of AI. So that's why there's a lot of opportunity here to look at the new incentive, disclosure incentive in the age of AI. The paper I have done just one example because you know because just the readership changed, right? Because 20 years ago, human is reading the disclosure. Now machine are reading the disclosure. How does the managers change their disclosure behavior, disclosure incentive to make a machine happy? So there's many study we can do for this type of research, new incentive in the age of AI. So it's supposed to be a accounting paper. I mean, it's supposed to be accounting paper, but we publish in the finance because I think it's because of the novelty, because it's new, because no one has looked at the managers catering to machine. So that paper appears in the finance. But I think accounting will welcome that type of research because this is like a more of an incentive to disclosure. So for the consequence, what kind of consequence we are talking about here for disclosure? So we are talking about the biggest consequence people do is trading decisions. So once we have a disclosure released to the capital market, how does that affect the investors' trading decisions? So that's the consequence. The first consequence most of the study focus on. So how does the AI change the consequence? Because AI can extract some textual variables, and the variables you can never obtain before age of AI. So for example, climate exposure, right? Climate exposure, we talk about these are the variables we can extract from this disclosure using machine learning, and also political risk. So there are many textual variables, which is difficult to quantify them before, but you can using machine learning to quantify them and look at their consequence on the trading. And as I remember, I told you guys before, you have to do a keyword search, you have to do like a deep learning, blah, blah. Now you just use large language model. You use large language model, easily you can extract climate risk, political risk, anything you can imagine, you can extract them. And you can use that to look at the consequence, how they affects the investor trading. So machine learning help us to extract some new information from disclosure and quantify it, and we can study the consequence. And it's much easier now to use large language model to do this. But the problem is for you, like I emphasized before, the barrier is not the technology. The barrier is the concept. What kind of variable you want to extract? So people has done political risk. People has done climate risk. People have done pandemic risk. People has done country risk. So all this concept has been done from analyzing the disclosure. So you have to come up with a new concept, new construct. You have to come up with the question, and then LLM can help you to get that variable. So you guys can see the barrier. The barrier is not technology, because using LLM, you can get a variable calculated. But what variable you calculate? Why the variable is interesting? That's the barrier. I keep saying that this is the finance accounting scholar's job. We have to come up with that interesting contrast, and nowadays it's easier to implement that. So this is how AI changed the disclosure literature to some degree, because the AI can get some variable easily from the text and look at the trading decisions. So investors, they can also extract this information, so basically AI can extract the information from the disclosure and look at how it affects the trading decision. And I'm also interested in how this one affects the retail investors. So basically, so many study has done how AI affects the capital market as a whole, but how AI affects the retail investors, this is very interesting. So the AI divide, the paper I just mentioned, AI divide. So the images will only affect the hedge fund. The image disclosure will only affect hedge funds trading. The image will not affect retail trading. So this is something we can also explore as well. So what I'm trying to say here is, with the power of AI, we can analyze disclosure to get from new variables, from text and from images. And we also can look at the consequence for hedge funds and retail investors. These are all very interesting stuff we can explore. And we have a consequence not just for shareholders. We have consequence for managers. We have consequence for creditors. We have consequence suppliers. So we can analyze the disclosure consequence for all type of people here. So you guys can see here, what's the disclosure consequence for corporates. So if one company disclose something, how other companies are learning from the company's disclosure. So copycatting, right? Copycatting is like a consequence for peer companies. And how the company's disclosure affects the employees, how the company's disclosure affects the peer company's cash flow management. So basically, the disclosure not just affects the investors, the disclosure also affects the peer companies. So you can see that the disclosure consequence, we can do more of a lot of consequences we can examine how the disclosure affects the investors trading and how the company's disclosure affects the peer companies' operational decision. And also, we also see when there's a company disclose how the disclosure affects the creditor's decision. So in the bond market, when one company disclose how the company's disclosure affects the bond market trading, and also how the disclosure affects the government regulation, right? Tax, right? Tax avoidance, blah blah. If company disclose more, would that attracts more of the tax regulation? And also, when the company disclose more, would that affects employees? So you guys see some recent papers when the company have a better disclosure, you kind of retain their employees, right? So the disclosure will not just affect investors. The disclosure will affect creditors. Disclosure will affect government. The disclosure will affect their own employees. The disclosure may affect auditors. The disclosure may affect supplying customers. The disclosure also affect competitors. So when we talk about the consequence, we can make it more broad. But you can see many papers focus on investors, right? That's a majority of the studies. But disclosure also can focus on the creditors of the firm, the regulators of the firm, employees of the firm, auditors of the firm. So there's many interesting stuff we can do using AI. So to conclude, what I'm trying to say here is the accounting for the disclosure for accounting focus on both incentive and the consequence, but finance focus more on the consequence. For the incentive wise, these are the traditional incentive, but AI bring more interesting incentive for accounting scholars to look at. For consequence, we can be more broad, not just focus on consequence for trading or investors. We can focus on the creditors, government, and employees and auditors. And there's many interesting study we can do about disclosure. And when we add the AI component, it make it even more interesting to me.